I think the most probable path is continued volatility, which means that it's not stair step and it's not just a jump up to the next plateau. It's more like this. And then you'll see one big jump up from that volatility, and then it'll form that new plateau, which is kind of like what we've seen recently. You have the volatility up to 60,000, kind of held that plateau. You have volatility now to over 100,000. It's kind of holding the 80 plateau. So does it then have the volatility of doubling in size overnight? So it's absolutely possible for Bitcoin.
Lavish kicks off by acknowledging a simple but powerful truth.
Markets hate uncertainty, and right now, we're seeing it everywhere. From rising political tensions and unpredictable interest rate swings to the constantly shifting landscape of global trade. It's no surprise investors are on edge. When you look at the current market through the lens of Bitcoin, Lavish points out a major turning point: the return of former President Trump to office. His administration wasted no time making bold moves on crypto policy. One of the most notable? An executive order to create a U.S. Bitcoin strategic reserve, a headline-grabbing decision that, at first glance, seemed incredibly bullish for crypto. But instead of surging, Bitcoin dropped. Before we dive deeper, take a moment to like this video, subscribe to the channel, and turn on post notifications so you never miss an update. We've got plenty more content covering Bitcoin, digital assets, and the future of finance. And hey, don't forget to drop your thoughts in the comments. Your engagement helps the algorithm and supports the channel in a big way. Thanks for watching. Let's get into it.
The markets hate uncertainty. And when, what we've seen is, if we look at the markets through a kind of a Bitcoin lens, but the overall market, what we've seen is Trump was elected and this new administration came in, and they have been very pro-crypto, pro-Bitcoin. They immediately came right out of the gates, and he issued an executive order within weeks of starting his term, and that executive order was to establish a Bitcoin strategic reserve. And so that was supposedly a kind of a gating event, and that Bitcoin would rally off of that. But it didn't rally, it fell. And so it was confusing to people, the outsiders. They didn't understand what was going on. But really what was going on is that the Bitcoin investors and people who were speculating that strategic reserve would include some sort of measure to buy Bitcoin. Okay, so there was no measure to buy it. There's only a measure to add to it in a budget neutral sense, or in a budget neutral way. So Bitcoin dropped. So what we've seen is Bitcoin, after Trump was elected, had a great run to all-time highs of just about 110,000, just under that. And then it kind of faded from there. And it faded for multiple reasons. We started getting some economic data that was suggesting just more inflation. Bond prices were, they were dropping and rates were rising. And that was because people are expecting for more bond issuance, massive bond issuance, and more inflation and possibly stagflation. And so we started getting some market uncertainty there. Bitcoin started to draw down, fell below 100,000. Then we get that strategic reserve announcement, and it really starts getting hit, and people were disappointed. And then you had a steep drawdown with market uncertainty and tariff threats, like you said. And Bitcoin draws down a total of 30% from the all-time high. And so it starts to climb back, and you get this continuing uncertainty in the market. And like you said last week, then we started to see that kind of watershed moment where investors realize, oh, he is dead serious. This isn't a threat. Like, he's going to really enact these tariffs. And the general market got very nervous and started selling the risk assets, started selling the S&P. And Bitcoin went down ahead of it and with it. And then Friday came along. And the market opened down 3% on the opening, which was a gap down of 3%. But Bitcoin was up from the day before, and it was kind of perplexing. So the question is, has Bitcoin really decoupled from risk assets? Are people looking at it and saying, all right, this is what I want to own? Like even gold was down. And are they saying, do I want to allocate to Bitcoin because there's so much uncertainty in the world? Or is it that Bitcoin drew down first and now it's found a spot where it's going to hold steady here, and it's really found a bottom? It's already had a local bottom. And that's the question. And that's what everybody's trying to figure out. I think the most probable path is continued volatility, which means that it's not stair step, and it's not just a jump up to the next plateau. It's more like this. And then you'll see one big jump up from that volatility, and then it'll form that new plateau, which is kind of like what we've seen recently. You have the volatility up to 60,000, kind of held that plateau. You have volatility now to over 100,000. It's kind of holding the 80 plateau. So does it then have the volatility of doubling in size overnight? So it's absolutely possible for Bitcoin. If you have the passage of the Bitcoin the Bitcoin Act, okay, or you have something like the U.S. government announced they've sold gold to buy Bitcoin. They probably wouldn't announce it first. They probably do it, and then or you have a large nation state announce that they bought Bitcoin, right? So it's maybe one of the BRICS nations, or maybe another developed country like Germany. Like if that ever happened, I don't see that yet. But or the EU, or if you had a very large corporation adopt Bitcoin in their treasury strategy, and not doing the volatility play like Michael Saylor is doing for MicroStrategy, but something like a Microsoft or an Apple or one of these massive companies that are holding, tens of billions of dollars on their balance sheets, and they turn around and start buying Bitcoin, that could then propel it to a level, increase volatility for a moment, but to the upside mostly. So, and that's what I'm looking for.
Tariffs are another critical part of the bigger picture. While they might seem like isolated policy moves, Lavish emphasizes that their second-order effects are massive and often unexpected. Companies will be forced to adapt, shifting operations, relocating supply chains, and reworking profit models. These aren't quick fixes. They take time, and that time adds more volatility to an already shaky economy. As the global landscape adjusts, Lavish urges investors to keep a close eye on Bitcoin, not just over the next few days or weeks, but over longer time frames. If Bitcoin continues to show sustained non-correlation with the NASDAQ and other major equities, it could be the clearest sign yet that it's finally decoupling and stepping into its role as a truly independent asset class. Let's go back to the interview.
So the tariffs, they can be seen as kind of a one-time event, in that tariffs are set, it's a one-time repricing, and then we move forward. They could be seen as that, and the market will adjust around that, but the fallout from it is really uncertain.
Second order effects, yeah.
Correct. So the question is, how long does it take for these companies they have to, some of them have to pivot, some of them have to just reorganize their business around certain lines. Some of them have to build facilities here in order to start getting better margins again. So it takes time, like you said. So what I want to see is a sustained decoupling. And even if it's the market's going up and Bitcoin's not going up, or the market's going sideways and Bitcoin is doing its own thing, as long as it's not directly correlated to the NASDAQ, that's a really good sign to me that Bitcoin is decoupled. But that's going to me, that's not just a couple of days or weeks. Like, that's got to be months and months of that. And so it remains to be seen whether we're on that path or not. So the question is, if there's $900 trillion of assets in the world, investable assets in the world, which I just spoke about, then is Bitcoin gaining share of that? Is it getting larger as a share of those investable assets? Or is it just following the expansion of the money supply that it goes from 900 trillion to 1 quadrillion to 1.1 quadrillion? Is it just following that? So that's the question. And as adoption continues, is it breaking away and saying, this is now a separate asset, a store of value? And really, to answer your question about institutions and pension funds and endowments of traditional money managers, the real traditional institutions, it's when do they start to understand that Bitcoin is not a risk-on asset? When do they start to understand that it is truly a separate store of value? It's a scarce store of value and the ultimate risk-off asset when you step back and understand it truly. So when do they get to that understanding? And I think that we're starting to see that's accelerating. They're not adopting it yet, but that the research and the knowledge base is expanding. And that has to do with what we talked about at the beginning, which is the U.S. government is now, they're investing in Bitcoin. And so the game theory is not just sovereigns, but it's everybody. If the U.S. government is investing in Bitcoin, why am I not investing in it? What am I missing? What am I missing as a traditional money manager that I'm not looking into this? And I don't see it the same way as other people do. And so as that occurs, and we ultimately get the Bitcoin Act passed by Senator Lummis, whenever that happens, it may take months, it may take years, but once that happens, then you've got the traditional money managers that will say, okay, now it's moved from a risk to own asset to a risk of not owning any asset. And I've got to treat it separately in my portfolio. And that's when you really get that decoupling and adoption.
When it comes to endowments and asset managers, Lavish makes a bold prediction. Bitcoin will soon become a core portfolio asset. Not because it's too risky to hold, but because it'll be too risky not to. He believes this mindset shift is already in motion. While these institutions might not be buying Bitcoin yet, they're watching closely, doing the homework, running internal models, and prepping for strategic entry. And now, with the U.S. government signaling serious intent by positioning Bitcoin as a strategic reserve, the game could change overnight. As Lavish puts it, if the U.S. government is buying Bitcoin, what am I missing? That one question, echoed across boardrooms from Wall Street to Silicon Valley, could ignite the next wave of institutional adoption. If you're finding this valuable, don't forget to like, subscribe, and turn on post notifications. We've got more deep dives coming your way.